The share return on my high-yield ETF portfolio is continuing to kill me. Stay tuned and I'll give you updates on what happened to the portfolio this week. I'm on the hunt for an infinite stream of dividend income. It begins with my plan to turn $1,000 of Robinhood's money into $1,000 of my money. And remember, none of this is financial or investing advice. You need to research your own investments and do your own due diligence. Here's a quick recap of my strategy for everyone new to the channel or for those of you who haven't been here in a while. I'm using Robinhood Gold to get an interest-free $1,000 margin loan. I use that money to purchase 4 ultra-high-yield ETFs, MSTY, SNOY, COI, and NVYY. I've since sold MSTY because it was doing so poorly and replaced it with HOOW. The dividends I receive from these ETFs are split into 2 buckets. Half of the dividends are reinvested back into the fund. The other half is invested into my forever fund, SPY. This is a NAV-stable ETF that I hope will grow over the years and I'll be able to keep for decades. Once my position in SPY reaches $1,000, I'll start reinvesting all of the dividends back into paying off the loans for the 4 ultra-high-yield ETFs, in the hopes that eventually I'll be able to pay off the $1,000 margin loan and still have $1,000 in SPY. In order to make all of this work, I have to have at least $2,000 equity in my account. So I invested that $2,000 into PAAA. It's a NAV stable fund that doesn't earn much interest, but the share price remains really steady. I've even had to add to it twice with more shares of PAAA to help make up for the money that I've lost in the 4 high-yield ETFs. The main problem that I've run into so far has been the share price of the 4 ultra-high-yield ETFs. You can see here how the share prices have dropped dramatically, some of them losing over half of their value. But the share return summary doesn't tell the whole story. Let's take a look at some distributions. I received 39 cents per share for NVYY this week for a grand total of $4.34. I believe this was about a 97 or 99% annualized return rate. The dividend was split in half, with $2.17 being invested in SPY and the other half going back into NVYY. COI's dividend rebounded a lot this week, going from 18 cents per share last week to over 43 cents per share this week. This is about an 85 or 84% annualized return. Since the dollar amount was over $2, I could split them both in half and still have over $1, which allows me to reinvest the dividends quickly. Unlike the past couple of weeks, where when I split the dividend total in half, it was less than $1, and I can't invest less than $1 on Robinhood. So I was happy to see the dividend climb back up. Moving over to HOOW, its dividend was also in that 84-85% range, paying me $2.11. Same situation as with the previous fund. Because it was over $2, I was able to split it in half and immediately reinvest both of those dividends. SNOY's dividend dropped in half, but this puts it more in line with what it's been recently paying. And that's about a 97% distribution rate. So nothing to complain about there. I've already got market orders in to execute first thing Monday morning to reinvest those dividends. I'd previously failed to mention that I'd gotten a PAAA dividend in early December, 20 cents per share, so I was able to put $9 back into the foundation fund. Every little bit helps, since on 2 occasions I've had to add to PAAA to shore up the failings of the high-yield ETF share prices. And we already talked about SPY's dividend from end of November. So here's how things look on Robinhood. Over the past week, the portfolio was down about 1.4%. I've deployed all of my buying power, and currently Robinhood is okay with my margin amount. I'm 6% over the maintenance. Let's take a look at some of the individual holdings. We'll start off with NVYY, which hasn't had a great week, down over 4%. Current price is $19.63, and my average cost is $26.49. The market value is not bad at $219, considering that my initial investment was $250. Of course, I've been reinvesting half of the dividends. Let's take a look at COI. Also down on Friday and over 4% for the week. Current price is a little over $25. My average cost is a whopping $56. The share return on this investment has been terrible. So now let's go and take a look at HOOW. This is my most recent investment after I got rid of MSTY a few weeks ago. Also over 4% down recently, with a total of over 12.5% down on the week. Current price is $53.83 and my average cost per share is $67.81. The market value is the lowest of my four at $114, but this is mostly due to MSTY. And I'm hoping that the structure of HOOW will allow it to recover a lot of this market value. So now let's go back and take a look at my fourth high yield ETF, SNOY, which seems to be having trouble recently. For the week, also down almost 5%, currently trading at $12.26, and my average cost is $16.35. So behind NVYY, I think this one has been the most successful of my funds. While we're looking around in here, why don't we go ahead and check out SPY. The week, it was down 0.38%, trading at $52.67, which is actually a little above my average cost of $52.04. The market value is $141.54, and that's all profit. I'm purchasing these shares by investing half of the dividends from my high yield ETFs. And then, of course, SPY produces its own dividends, which are reinvested back into the fund. Here's a look at everything combined in one screen. This accounts for share price as well as reinvested dividends. NVYY and SNOY have really started slipping recently, whereas the COIW and the HOOW, previously MSTY position, have been down for a while. Those four high yield ETFs together are down about 33.5%. When I combine that with the SPY position, the portfolio is down about 19%. So things are not really looking good here. And I'm starting to wonder how this experiment is going to end. Let me know in the comments, do you think this is salvageable or am I just throwing money away? And if you found this video helpful or at least entertaining, I'd appreciate it if you'd hit the like button and subscribe for future updates. Keep in mind that none of this is financial, legal, or tax advice. I'm just inviting you along my journey. And if you'd like to learn more about my small account margin strategy, check out the first 5 videos in the series. And good luck hunting those infinite dividends. Take care.